A brief history of banking. Ancient banking, 2000 BCE, 500 CE. Banking originated in ancient Mesopotamia, where temples and palaces offered financial services such as grain loans to farmers and traders. These early banks recorded transactions on clay tablets. Babylon, Sedu 2000 BCE. The Code of Hammurabi regulated banking practices. Ancient Greece and Rome, moneylenders and bankers accepted deposits, exchanged currencies, and offered loans. Roman banking practices like promissory notes and interest charging closely resemble modern systems. 2. Medieval banking, 500–1500 CE. After the fall of the Roman Empire, banking declined in Europe but revived during the medieval period, especially with the rise of trade. Jewish and Italian bankers played major roles in financing trade. Knights Templar and later Italian merchant banks, e.g. Bardi and Peruzzi families, provided safe transfers of money across Europe. Bills of exchange were introduced to reduce the need to carry physical money, which was risky. 3. Renaissance and early modern banking, 1500–1800. This era saw the rise of more formal banking institutions. Medici Bank, 1397–1494. Based in Florence, it was one of the first major international banks. Bank of Amsterdam, 1609, and Bank of England, 1694. These public banks established central banking models, issued banknotes, and helped finance governments. Fractional reserve banking became more common, allowing banks to lend more than they held in reserves. 4. Industrial era and modernization, 1800–1945. With the Industrial Revolution, banks became central to financing large-scale projects and expanding global trade. Central banks became more powerful and began managing national monetary policies. Retail banking expanded, serving individuals and small businesses. Stock markets and investment banks grew, financing industry and empire. Banking crises, Isijaji 1873, Panic 1929 Great Depression, prompted early banking regulations. 5. Post-war and contemporary banking, 1945–present. The modern banking system evolved rapidly in the second half of the 20th century. Bretton Woods Agreement, 1944, created the IMF and World Bank, stabilizing post-war economies. Electronic banking and credit cards emerged in the 1950s to 60s. Deregulation in the 1980s-90s led to bank mergers and global banking giants. 2008 financial crisis. Triggered by excessive risk-taking, it led to widespread reform, e.g. Dodd-Frank Act in the US. Fintech and digital banking, 2010s present. Mobile banking, blockchain, and cryptocurrencies are reshaping the landscape.